Hello, good Sunday. Now it's Sunday afternoon, November 1st, 2020. We have lots of people want to know MACD and RSI and VWAP. Today I'm going to share with the information on the website is from the other broker Fidelity, MACD. If you want to go there to read more, it's okay. But I want to tell you the source where I got this. MACD description, the moving average. M means moving, right? A, average. C, convergence. And D means divergence. Indicator is a momentum oscillator primarily used to trade trends. Although it is an oscillator, it is not typically used to identify overbought or oversold conditions. It appears on the chart as two lines, which oscillate without boundaries. The crossover of the two lines gave trading signals similar to a two moving average system. So this is the line, two lines. One is red, one is green. Red is a MACD. The green is a signal line. So MACD histogram is this blue. So when there's another chart, let's do that later. Okay, go on. How this indicator works. MACD crossing above zero is considered bullish, while crossing below zero is bearish. Secondly, when MACD turns up from below zero, it is considered bullish. When it turns down from above zero, it is considered bearish. So this is the line, okay? It touching the line and goes up means bullish, right? From under zero, go above zero. When above zero, go to below zero means bearish. So this over here is bearish. But that's too late. I think that is too late when you see this signal. I want to get out from here. You need to learn the chart. Read the chart, read the price movement. Read the chart of the price action. So this is second top, it didn't go over. You need to get out from here. Not from here. I don't think so. That's too late. But this is only for your reference. But when you are experienced trader, you don't want to get out from here. You confirm this is bearish. But of course, this is confirmed. But when you see this line didn't go up, didn't go over this one, didn't go up. And this one right here, the second shoulder, this is the head, this is the shoulder. Right over here, you should get up, I think. And this is the line of the other shoulder, okay? You should get out from here, not here. I don't think so. I don't think you are getting out from here. But yes, that's a confirmation. This line is go over. But anyway, when experienced trader, when she didn't go over this line, they want to get out from here. This is a fake breakout. But when they dump from here, you should get out from here. But this line is not that far. Let me see here. From here to here. This is the second confirmation. This is the first confirmation. Didn't go up, and also the price is narrowed down. Now like this, spread is very, the price range is bigger than this. Then you should get out from here. Okay, go on. When the MACD line crosses from below to above the signal line, the indicator is considered bullish. The further below the zero line, the stronger the signal. When the MACD line crosses from above to below the signal line, the indicator is considered bearish. The further above the zero line, the stronger the signal is. The further above the zero line, the stronger the signal. Okay, so now they are telling you the further, the stronger. During trading ranges, the MACD will whipsaw with the fast line crossing back and the force. During the trading ranges, the MACD will whipsaw with the fast line crossing back and forth across the signal line. Users of the MACD generally avoid trading in this situation or close positions to reduce volatility within the portfolio. Divergence between the MACD and the price action is a stronger signal when it confirms the crossover signal like this. Calculation. An approximated MACD can be calculated by subtracting the value of a 26-period exponential moving average EMA from a 12-period EMA. The shorter EMA is constantly converging towards and the diverging away from the longer EMA. This causes MACD to oscillate around the zero level. A signal line is created within a 9-period EMA of the MACD line. Note, this sample calculation above is the default. You can adjust the parameters based upon your own criteria. So this is about that. The technical analysis focuses on market action, especially volume and the price. Technical analysis is only one approach to analyzing stocks. When considering which stocks to buy or sell, you should use the approach that you are most comfortable with. As with all your investment, you must make your own determination as to whether an investment in any particular security or securities is right for you based on your investment objectives, risk tolerance, and financial situation. Past performance is no guarantee of further results. This is about the MACD, and I'm going to share with you about another indicator. Wait a second. Moving average. I don't think so. I don't think that's the one. Moving average. Also, okay, when this one you see is MACD line, I want to let you know. MACD, see the line cross over the 0, then that's bearish, right? When cross over the 0 line is bullish. So from here, the blue line, the yellow line. The blue line is MACD, and the yellow line is a signal line. So the signal tells you right here is going to buy. The blue line MACD line is cross over 0. This one, cross 0 here. And also when you see the candlestick, when go over this resistance line, it's considered buying signal. See this, from this line here, this cross over this resistance line. Okay, that's what I do. But when you want to use MACD line, just consider this blue line, MACD. Most of the chart on different broker, they give you MACD indicator as default. So I think this is important for you to know when you are not sure, using this as reference to see whether you make your decision to buy or sell. Okay, and I have another one is VWAP. This also lots of traders using VWAP as the indicator. Volume. Let me see whether this is in. Yes, it is in. Volume weighted average price. VWAP definition is V means volume, W means weighted, A means average, P means price. What is the volume? What is the volume weighted average price, VWAP? The volume weighted average price is a trading benchmark used by traders that gives the average price a security has traded at throughout the day based on both volume and the price. It is important because it provides traders with insight into both the trend and the value of a security. So this is a VWAP, okay? This is a VWAP line, and tell you what is going on with the price action. Key takeaway: the volume weighted average price appears as a signal line on intraday chart, 1 minute, 15 minutes, and so on, similar to how a moving average looks. Retail and the professional trader may use the VWAP as a part of their trading rules for determining intraday trend. The formula for VWAP is VWAP is calculated by adding up the dollars traded for every transaction, price multiplied by the number of shares traded, and then dividing by the total shares traded. So this is the formula: volume, price. How to calculate volume weighted average price? Here's the video we can play, let you to see.
Volume-weighted average price, or VWAP, is the average value of a stock traded over the course of a set time horizon, which is typically 1 day. Traders use VWAP as a benchmark to ensure their stock purchases are in line with the volume on the market. Traders can gauge their efficiency by comparing the price at which they traded a stock to its VWAP. If they bought at a lower price than the VWAP, they're usually pleased. If they bought at a higher price than the VWAP, they're not. Investors calculate a stock's VWAP by totaling the dollars traded on a security, the price multiplied by numbers of shares traded, and then dividing by the total shares of that security exchanged over the time horizon. For example, 3 buys for a particular stock occur over an hour. One was for 100 shares at $10 per share, one was 300 shares at $8, and a third was 200 shares at $11. The VWAP for that stock over the hour is $9.33. The trader who paid $11 per share and the trader who paid $10 are disappointed. The trader who paid $8 per share is happy. Many pension funds and some mutual funds use VWAP. When their intraday price varies widely from the VWAP, the price may be pressured to move closer to it. Price varies widely from the VWAP, the price may be pressured to move closer to it. The trader who paid $10 are disappointed. The trader who paid $8 per share is happy. Many pension funds and some mutual funds use VWAP. When their intraday price varies widely from the VWAP, the price may be pressured to move closer to it.
I replayed a part of it because I was zooming smaller. So this is about that. And I want to talk about RSI. Is this in this screen now? RSI. I hope so. Okay, RSI. This I use the most. I check when I was trading. I check all of that, and from experience, the day trader they use RSI a lot. This means when RSI reaches 30, and that's the oversold, you need to buy. When reach 70, that's overbought, you need to sell. So let's get started on this. RSI means Relative Strength Index. Can I make this bigger? I don't know. What is the Relative Strength Index? The Relative Strength Index is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. The traditional interpretation and uses of the RSI are that values of 70 or above indicate that a security is becoming overbought or overvalued and may be primed for a trend reversal or corrective pullback in price. An RSI reading of 30 or below indicates an oversold or undervalued condition. That's what I use for buy signal. Over 70 for selling signal. Key takeaway: the relative strength index (RSI) is a popular momentum oscillator developed in 1978. The RSI provides technical traders signals about bullish and bearish price momentum, and it is often plotted beneath the graph of an asset's price. An asset is usually considered overbought when the RSI is above 70% and oversold when it is below 30%. Let's watch this. What's going on? Right. Sorry about that. What's going on here? Hey, why there's no sound? Sorry about that. Oh, here.
Those things, I prefer the standard 14 periods. And then when you hear the relative strength
Let's start
index,
it again.
so the relative strength index has a standard 14 periods on your traditional charting softwares. You can go ahead and change those things. I prefer the standard 14 periods. And then when you hear the relative strength index, we are not referring to relative strength. The relative strength index, RSI for short, is simply a momentum indicator. Relative strength is one asset compared to another. So if financials are outperforming the S&P 500, financials are showing relative strength. If healthcare is underperforming the S&P 500, healthcare is showing relative weakness. Okay? So when we talk about RSI, the relative strength index, we are simply referring to a momentum indicator. And then when you hear me say period, if we're looking at a weekly chart, that means we're using a 14-week RSI. And if we're looking at a daily chart, that means we're looking at a 14-day RSI. And the indicator goes from 0 to 100. So all that means is that it's an oscillator. So the RSI is a momentum oscillator that goes between 0 and 100. Traditionally, 30 is giving you an oversold reading, and 70 is giving you an overbought reading. So now we're going to talk about how we use that 30 and 70 to our advantage.
So that is about that. Today, this is all I want to share with you guys. I organize the information, and you guys can do a little further research, and if that will help you to understand RSI, VWAP, and MACD. So again, I'm a day trader. I'm not a financial analyst and advisor, and I only share what I know from the internet, from the web. Also, today I only want to share with this because some people, ask me about like MACD, and we do know that the website always give you default MACD chart, the indicator. And the RSI, I used a lot. I want to share with you. I always trying to see the RSI when I try to do an entry of a position. And when sell, when too much, over 70 on the RSI, that's the point I want to sell. And when pull back a little, then to get in again. But anyway, this is only the reference, not very guaranteed. That's the solid indicator. When market is different or catalyst or any news, this indicator may not work. The VWAP, RSI, MACD. That's the basic indicator for day trader. I have today's Sunday, and we only have 2 days for the president, the election date. And we are watching. We want to see when the market is getting stabler. Now is too much, still too much. Yeah, as I shared with you guys, now that is time to get in right now. No. I will share with you in the next video about what for holding long term. For some stocks, I want to share with you in the next video, and which one to do the long term holding. Okay, see the lines up, do it in the next one. Okay, and I thank you so much for watching, and you have a nice weekend. Thank you. Bye-bye.